holiday season over, futures open back up for trading, and now let's discuss.
Let me into my zone. Let me into my zone. Please don't let me into my zone. 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 Please don't let me.
Welcome back to Krown's Crypto Cave. I have a little bit of a lack of sleep from yesterday night to this morning, so forgive my less than eloquent speech today. Anyways, I do want to be wishing you well on this nice start to your week, a week of perhaps new opportunities and peaceful and profitable endeavors, we'll call it that. Anyways, there's a lot to talk about today as we did hit the southern road after CME's opened back up last night. Now that E-mini futures are trading for traditional markets, which is going to be a big focus of this video, I do believe that there are a lot of ways forwards, and we will be discussing the statistical and probabilistic events on top of that. Other than that, I think we should probably just get into it sooner rather than later. I do want to say, actually, before we get into it, though, I will be on Twitch later today, assuming that I still feel all good. Like I said, a little bit of a lack of sleep, so we'll see how my words come out today. But I'll start that a few hours after this. Just need to eat a shit ton of steak and take a nice poopy. Anyways, on top of that, I also do want to say that the Krown trading application, which we are looking at right now, is showing, once again, open interest right around that $700 million mark, which actually is quite interesting because I would have expected that to really accelerate in line with price action falling down last night. So that is actually going to tie into the analysis very, very well, that we have still not seen that big move that we would be expecting from a read like this. And that's going to offer up a new dynamic with what we're looking at on the medium timeframes especially. So once we get into the actual price action analysis, I want to keep that in the back of our mind's eye. But for now, I do want to take a quick look at the Bitcoin dominance and all of the metrics at the top of the screen right here. We do see that everything's more or less steady. Total market cap a little bit down, but again, more or less steady across the board. And what's still the thing that actually makes me consider that perhaps we aren't looking at, or sorry, perhaps I'm really missing something, or that I should not be bearish overall, is the crypto fear and greed index. This is really the biggest thing to me right now. That's kind of a counterpoint to what I'd be looking at in the actual charts, as we are quite literally in the extremely fearful zone after 2xing off the lows, which is a pretty damn strong hallmark of, well, climbing that wall of worry. Although the Bitcoin has a massive wall of worry to get above, so it's not over there anytime soon. In fact, it's going to have to get back above the 5 digits comfortably in order to fully clear that wall. But that is interesting nonetheless. This market incredibly fearful, even after basically a 2x off the lows. Anyways, let's balance this with an actual price analysis right on over here. Let me just make sure that I'm recording and the microphone's working. 3 minutes in, that's a new record. Fucking yes. And let's get on over here to our GDAX chart. So I want to first begin by saying this, that yesterday on the lower term timeframes, I did get something massively wrong. I was looking at the $7,000, 70-50-ish region to kind of trigger that next event all the way up to our next resistance in this blue box territory at about 7,300 to 7,400. That target was front ran at 72, right in line with this. If you wanted to shove a nice horizontal right here, you certainly could. I did not. I was expecting that to go a little bit higher. But again, expectation is a bad thing to have in cryptocurrency land. And more importantly, this is why I do not trade over the weekends. The reason being because I just don't trust price action all that much. And with a quick swing failure pattern right here, the real answer to what I should have been looking at was not a 4-hour time frame, but more or less a 12-hour or a medium time frame. Again, in line with with my sort of idea that the weekend price action is typically floaty, typically flighty, and usually used to shake out over leveraged people. In this case, we did get that shakeout to the upside, as we spoke about yesterday, but the time frame that I was using to kind of delineate that, I think, was a little bit too aggressive, and that is again why I just do not really care to be trading on a weekend, especially one that's a holiday weekend as well. So as it stands right now, Bitcoin is once again in limbo as the sell-off immediately begins right after CMEs come back online. In fact, just going right on over here to CME chart, it looks like continuation of the downside to me. However, more importantly, as aligns with our open interest back on over here at the Krown trading application, we do see that I don't believe as of this exact moment, again, this is being recorded early in the morning on Monday, so this can very easily change once New York Stock Exchange opens at 9:30 a.m. Eastern time. I don't believe that we've seen the big breakdown just yet. If that is indeed what you're looking for, I want to see either a 12-hour total closure below about 6750-ish region on CMEs, or if we go over here to our spot charts, I'd like to see a 4-hour total closure. I mean, it's a little bit more difficult here because technically speaking, I do have this as already broken. But at the end of the day, I would like to see a higher term time frame confirm this. And that would be, using this area on a daily would be about where we are right now at 6,700. Perhaps on the next 12-hour dildo should do it, even though I did not make this chart on a 12-hour. I think that waiting for the next daily to kind of confirm itself is a little bit too conservative in this case. Then again, I'm not a breakout trader myself. I will just be holding short here as I've once again uncovered my short position from about 7,200-ish region by buying back those puts on that move up to about 7,100-ish region as overall the medium and higher term time frame still angled to the downside here, especially with momentum oscillators tipping over while Bitcoin tests a major support on the macro, or I wouldn't say macro, but medium timeframes perhaps. We do see that daily Stokes absolutely pointed down in line with the 12 hours, and I believe the 2-day is looking to, no, it's actually not looking to fall through just yet. And I'm curious, did we actually close one yesterday night? No, we did not. We closed it tonight at 8 p.m. Eastern time. So if we do close it anywhere below the 10 simple, which is 6750-ish region, I do believe that we will see that further transpire in this move coming all the way down to the low $6,000 region, be anywhere between about 5,900 and 6,100, we'll call it overall. But that's more of a medium time frame look on this one. I'm not looking for that to happen like exactly this moment or anything like that. I want to see traditional markets open back up in trading, which we'll get into in just a little bit later. I also do want to say that with this price action, this has very obviously attacked the proverbial golden cross that we had right over here, once again pushing it into death cross zone relatively soon right afterwards, which is a really good insight on what the bots and algos are doing in this market. I talk about this a lot because this is what I've seen from my experience in traditional markets, being a market maker or authorized trader on the floor of New York Stock Exchange ARCA, as a lot of bots and algos will be programmed to take advantage of lesser sophisticated bots and algos. And in this case right here, you probably get a lot of people trying to trade the weekend bullshit, baiting them into a bullish position. And then right after it gets confirmed, and this is again on a 4-hour on the weekend, so take it as you will, immediately undone, unraveled, and more importantly, it's revealed on CMEs that we were never even close to begin with. So you see this a lot of the times. And usually when you get a fake out like this, that's very quickly, shifted to the other side, we do get a run in the other direction relatively fast. And we can go over a few historical examples of this. Let me just focus on these 3 moving averages right here. Again, this is the green and the purple that I want to keep the focus on. Obviously, this death cross running over here, not the best timer of all time, but gets some momentum overall. If just going from essentially the $9,000 region to 4,000, 3,000 if you want to be super exact. Running over here. Again, no floaty behavior. Gets a golden cross from about 7,400-ish region and all the way up to 10.5. Nice $3,000 move or ish. Right in over here, we do get a death cross going all the way from about almost 9,000 down to about 65. Another multi-$1,000 move, and then right on over here, we do have a little bit of a one-off where, technically speaking, if you did wait for the retest of the 55, you actually would have gotten a decent move. This was about a 70% move. Again, not even hindsight trading it, like taking it at the worst price point. So that's still very much tradable, but I would consider this, more or less a failure, as it is just a failed rally attempt on the macro. As you can see, the trend to the downside still remaining all the way through. So what does that mean? It means, it's kind of what we're talking about right now in the proximal price action for Bitcoin. We really don't start to get into these more intense situations that we're kind of seeing right now until this area right here. I think there's some good case studies. You do see that there's several attempts where the 55 is looking across a 200, multiple attempts for that, and at the very last second it gets shoved right back down on the other side. Let me just make sure that my phone's not going crazy over here. Okay, cool. All right, awesome. Anyways, 1, 2, and you can see that every time it gets close, runs the other way and just keeps on accumulating those positions on the wrong side until the inevitable big breakdown. And then, before that, we were basically golden crossed all the way from, 3,600 to 14,000 on that run from 2019. And before that, we have to go back to about 2018 for the last few examples, again, of these failed crosses, which I believe are more or less more or less more dubious attempts by the market movers to, well, to get people on the wrong on the wrong side of price action. So right here, right here, right here, all accumulating for that next big move to the downside. Anyways, as it is right now, I still remain with my overall bias that as long as Bitcoin is below the 200 exponential moving average on the 4-hour total time frame, which is a little bit below $7,000, I am more trending bearish on short and medium term time frames. Could we bounce back up a little bit here and play out a little bit of upside on the lower term time frames? Yes, absolutely. Doesn't really throw anything too off base. And looking at our low time frame blue boxes, I would say that we have a natural resistance coming in right at the edge of the breakdown of this last little move right here at about 6,800, a little bit above 6,800, about 6,820 if you want to get super exact. Also in line with our long-term trend line that has been supporting this move to the upside. However, looking at the volume signature for this, having that nice tailing off effect from left to right hand side, it does look extremely mature, as we are almost near the apex. In fact, this is incredibly mature enough to break at any moment in time, I would say, with an expiration date at the end of this week on the 17th. So I guess that would be Thursday, maybe. Yeah, probably Thursday. So I think that we're probably going to break before that. Actually, looking at open interest, it would suggest that we haven't seen that next change behavior. We want to see this shoot up much above 700 million, perhaps around 750 million to 800 million is where I really start to get interested in looking for this move to really be that redistributive channel that we've been looking for, or at least maybe not we've been looking for, but I've been kind of looking at this for a while now. As no matter which way you kind of chart this one, if you're a pattern trader, you're looking at this as either some sort of a rising channel or a rising wedge. Very, 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 very likely as volume kind of tails off as open interest goes down. And if you want to take this one step further, just look at the historical volatility percentile, which is, by the way, precipitating this move. And this is where things get a little more Jedi-like right here. We saw a whole contraction phase from March 13th to basically where we are right now. Well, what does that look like on price action? That was this whole move to the upside. That was a contraction going on a mean reverting indicator, while price action essentially was playing out a massive move to the downside long term, and now just consolidating and bringing it back up. So putting that back in line with the volume signature and the open interest signature alongside pattern analysis, we can really bring everything together and say that, you know what, actually this is very likely breaking down, or at least I would say that it's likely breaking down to the downside. And this kind of further confirms that, with the volatility being a more direct derivative of price action here, which is going to precipitate all those other signals. So volatility is going to tell you first, and with it expanding as Bitcoin goes to the downside from this $7,400 top right here back above the moving average on it, I do believe that we're going to enter into an expansion phase. And with the way that price action is trending here, I mean, that plus momentum oscillators on the medium and higher term timeframes does suggest downside alongside perhaps a break of this rising trend line, which would initiate a measured move from a rising channel perspective all the way down actually towards about 48 to 4,900-ish region. Now you will see that there's several blue boxes along the way towards that region, which I do think that Bitcoin's going to, at the very least, attempt to bounces on lower term timeframes, that being about 6,400, give or take about $50. Then I have about 5,900, give or take about $50. Then I have about 5,600, give or take about $50. That's actually the 200 simple on the weekly as well, so I like the confluence there. And then yes, all the way down right around, let's call it like 4,900, give or take a $50 or and such. And I would essentially be holding on to this and looking at this as likely broken as long as Bitcoin is on a closing basis below the 200 exponential moving average on this 4-hour total time frame right here. The more and more divergence that these two moving averages get away from each other, and the focus is on the 55 and the 200 right here, just for clarity, just for clarity's sake, the more and more intense that trend will very likely get. And this is further, in my opinion, verified by the 2 days we've been looking at quite a bit as well. Getting the death cross right in over here, Bitcoin gets a nice rally up attempt, and after that, losing the 21 exponential moving average. I am bearish with a bias towards trending to the downside as long as we are below the 21 exponential moving average, especially on an open and closed base, and even on a closing base. So what I would say is that going back through the history of time right here as well, we have several examples both to the upside and the downside. Upside is just as glorious as the downside. You have an example right here from 7,000 to 14,000, but more importantly, what's relevant to what we're looking at right now is this example right here in 2018 September, where Bitcoin gets a death cross. Slowly but surely, these two moving averages diverge, telling you that the trend is strengthening to the downside. And once Bitcoin gets below the 21 exponential moving average, it is dangerous. It is time to rock and roll to the downside, going from last high to next low about 51%, right? And we've done this a million times now, so you probably already know, and this is really boring for you. There's nothing new here, but I do want to cover this up just for thoroughness' sake, I guess. The example before that, of course, we had a couple of golden cross before that. Absolutely glorious from like $320,000, but let's focus on this baby right here. I don't want to get too deep into long-term analysis. That was the focus of yesterday's video in the long-term analysis playlist. Actually, I didn't even think I forgot to upload it in the long-term analysis playlist. It might just be in streams, but maybe I can change that after this. We get the death cross running over here. Bitcoin goes back down below has an initial short move to the downside, but gets that rally back up to the 55 and even the 200 by extension. And then once we get wrangled back down below the 21, especially on an open and close basis, there's your 55% move down. And we had a very similar thing going on in 2018 as well. You do see that Bitcoin spent a lot of time going sideways here, putting in this descending triangle, another distribution formation, and we do test the 55. And sorry, I also forgot to mention that in 2014, 2015, what was going on right here? This was a rising channel in and of itself, wasn't it? We do have something like this, or I guess I already have it in there, or I guess maybe less of a rising channel and more of a rising broadening wedge, which both imply the same sort of thing, and that is redistribution. And what do you have right on over here? It's not necessarily the same formation, of course, but it does imply the same sort of does imply the same sort of resolution, a redistribution formation in the form of a rising channel, especially, again, verified by volume signature. Volatility precipitates all of that, and then open interest further confirming. But I really like to see open interest shoot up above that $700 million mark as Bitcoin does break this next level. That would make me feel a lot more confident that we will see this really come down to the lower $5,000 region. Anyways, while we are here as well, we should, like I said, I did take a look at the 2-day Stokes. They're technically up right now, but with them getting up this high and price action, kind of being floated within this region and not doing anything, not changing anything around the macro. And by the way, I need to talk about this more because Jesus fucking Christ, you never know how awfully you can be misheard on the internet. I am not medium or long-term bullish as long as Bitcoin's below 73 to 7,400 in this blue box right here. I'm not short-term bullish as long as we're below about 7,000 now, and we can even get rid of, well, we could keep it there, but I'm just gonna have it as a straight up horizontal because it's not gonna be too relevant to what we're looking at right now. I think they're kind of seeing the momentum take over already. Anyways, going back to the 2-day. And keeping in mind that the daily Stokes have actually just freshly crossed to the downside. Let's look at what the forecast reverse Stoke indicator cross is going to give us, and we would have to close below about 6,400 on this next 2-day dildo to cross it to the downside. So that's also a damn good area to be looking at, especially seeing as the 2 days closing tonight at 8 p.m. Eastern Time, alongside the daily, of course, as well. And if we do close anywhere below 6,400 or even around 6,400, I would look for this to perhaps have a small bounce around there. Remember, we do have a nice blue box in that territory for the lower term timeframes, but ultimately that would be pretty damn indicative to me that we are going to see all momentum oscillators tip back down below. I think the 2-day RSI is given a little bit of a love tappy tap here as well, which we can actually look at for the reverse cross on this one as well. And what do you know? It's actually below our current body where we currently are right now at about 66.75 region. So anywhere below 66.75, we will lose the exponential on the RSI. That to me is not as big of a deal actually as a Stokes crossing down right here, because if we confirm a breakage of this formation plus momentum also is turning down on a higher time frame like this, I think that that's pretty damn indicative that we will be playing it out more or less well. Now the daily is obviously already there, and to put in perspective, for the daily Stokes to cross back up to the upside, we need to, or not we, but Bitcoin needs to get back above about 73.50ish region. So as long as we are below, especially even 7,000, I am more short-term, medium-term, and long-term bearish. And as long as Bitcoin is below about 73 to 7,400, I'm medium and long-term bearish. And on top of that, we do see that daily RSI has confirmed below the exponential as well. And more importantly, on daily RSI, we do see the same channel here as well. And I do believe that this confirms that it is broken. So both are derivatives of price action, both RSI and to a greater extent, the volatility suggests that we're actually already seeing this kind of happen in real time. On top of that, in order to cross the RSI back above that exponential, we need to close this next daily dildo above 6,900. Obviously, that's possible. I'm not saying that these are impossible things, but to put it in perspective, that's what needs to be done from this time frames look. On top of that, let's go look at the weekly as well. The weekly, I think, is very interesting here for multiple reasons. The first big reasons being the ones that we've been following for the last like month or so. We do have two majorly bearish crosses here between the yellow 21 and the green 55, lower period below going below higher period, and then the 10 simple going below the 21, and by extension basically all of them. So to me, this looks like a rejection, or sorry, this looks like a test of the cross right here. The cross is immediately rejected at the end of the weekend's closure, and all major moving averages sloping down as that rejection happens, which again does make me think that this cross is actually going to be a lot more efficacious than your average one. This is like kind of textbook right here, in fact. And looking at the past experiences of that, I mean, we have we have just one of the bearish crosses right here. This caused the move from about 9,000 to 7,000 bucks right there. Not bad. Right on over here, we have another example. The 21 and the 55, right? Kind of in line with the 2-day dildo death cross as well. And you can see that, when they're both on the same side as each other, price action typically does follow. Right on over here in 2018, obviously the lower periods crossing first. And then if we go back to 2018, 2019, or sorry, 2014, 2015, again, I am perhaps a little bit underslept today. We do see a nasty cross right here, followed by the 21 and 55 right here. Test, boom, 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 reject, and down, down, down. So now I just sound like a fucking Roomba. Anyways, what even is a Roomba? Nobody knows. A robot cleaner. I used to have one, and her name was Veronica. She sucked. Tee-hee. It's like a great one. Okay, so I'm obviously very much underslept, and that was not creative at all. And you should now turn off the video and say, Krown, you are a fucking moron. Anyways. To me, I think it's very important to keep in mind where the 200x Benjamin average is on the weekly. That should be a natural support as well. Onto the downside, I would at the very, regardless of whether I'm super bearish or super bullish, I would at the very least look for a bounce there. Again, 5,900, and wherever the 200 simple is as well, which I'm going to guess at 56, or actually it's a little bit higher than that now, 56.50. So right in our blue box below that as well. So those two areas I'd like to actually coincide with. And from a longer term perspective, I don't want to get too bearish. Yes, I did speak about a move perhaps down to about 4,800-ish region. I really don't want to get too bearish until we actually close another weekly dildo below the 200 simple here, which again is about 56.50. So I do understand that there are a lot of people out there who have legitimate reason to believe that Bitcoin is going, into the 3,000s, 2,000s, even thousands, maybe even lower than that. I've seen for some people. That's all well and good, but for myself as a trader, not an analyst, but a trader, I take it one level at a time. And for the macro here, this would be my next macro level, to put it bluntly. As long as we're having closures above there, I think it's a little bit too premature to get like super bearish here. Just like to the upside, I think it's too premature to get bullish as long as we're below 73 to 7,400, especially on a higher term time frame close, daily, weekly, monthly, essentially. And again, just put in perspective, once again, I said I wouldn't talk about long term, but on the monthly, what's the monthly looking like with, well, basically more than half a month to go. So it's really, it's really not too applicable right now, but we do have a more bearish setup of this, especially with momentum oscillators turning to the downside here and maintaining to the downside, especially monthly Stokes and monthly RSI. Bitcoin needs to literally get about 8,500 for those switch back around, which we looked at yesterday. And then more importantly, the 21 is so far providing resistance for this month. And where is that coming in around? 7,300. So actually a little bit below that now too. So as long as we're below the 21 from a monthly standpoint, I'm not bullish on anything for that matter. So take that as you will. Anyways, let's go. We didn't even look at the low time frame oscillators. I'm curious what they're saying right now. We do see 4-hour Stokes actually up this whole way through. So 4-hour Stokes had basically a swing failure. Well, it's not even really a swing failure pattern to the upside or the downside for that matter. It's just fucking weekend bullshit is what it is. But the Stokes kind of getting a little bit of a bearish reset right there. I'm sure people are going to call this bullish divergence on 4-hour RSI. No, that's typically not how you get it. And more importantly, there's no local low here confirmed at all whatsoever. And it'll be super in question as long as we're especially below like 7,000 bucks. And more importantly, looking at our auto reverse Stoke cross, where does that actually cross back up? Where does that cross to the downside? 6,700. So if this next 4-hour dildo closes below 67, I do think that the probabilities of us coming down and playing out this downside move, it at the very least to like 6,400 is quite high. That should be mediated by the 3-hour, which is already preceding it, as you'd expect. But again, it is a good thing to confirm these things because they don't always agree. The 3-hour turning down freshly needs to close back above $7,000. Beautiful that we have the confluence there in order for it to cross back up to the upside. So again, $7,000 is the area to be watchful of, I do believe. 2-hour Stokes already coming down. These ones are going to be flip-flopping a little bit, and hourly kind of popping back up. So we're seeing bifurcation between these things, and I do think that Bitcoin is going to get another test back up to the upside, maybe like 6,800, maybe even 6,900. But again, my main opinion is that as long as we're below 7,000 on a 4-hour total closing basis, I look at that as likely a bearish retest. And Bitcoin's likely to kind of float around here. We are going to be putting in bullish divergence very likely on the hourly, so it's going back to the goddamn moon. The buy hourly not quite there just yet, has not confirmed a local low just yet, but could. But again, still the areas are very clearly delineated, and again, Bitcoin can have a rally back up to even $7,000, but as long as it's not closing above there, I don't really look at that as doing anything, changing any real opinions. We're 25 minutes in now. It's time to go look at E-mini futures, by the way, which are open for trading. And what do you know? As Bitcoin confirms, or maybe not confirms, but puts in what looks to be a reversal, it looks like E-mini futures are reversing right on the area that we spoke about last week, right on that 55, a little bit above 2,800. So, I think I said 2,830. We got up to 2,820. Close enough is fucking close enough, but I'm sure someone's gonna be out there like, Krown, you fucking moron, you missed it again. It's like, all right, listen, I'm not trying to be a crystal ball here, man. I'm trading. You don't need to be perfect when you're trading. You do if you're gonna be an analyst, and that's all that you got, I guess, if that's what you get paid for. Anyways, what's more important here is that while I do think we have a little bit of downside and probably do come back down to test around 2650-ish region, this is the next big area as far as I'm concerned. If traditional markets or if E-mini or SPY come back down to whatever level this is akin to, 2630, 2650, and especially close even like a 4-hour below there, and especially a daily below there, then I would look for this to crumble back on down to the 2350-ish region, all the way down here. Overall, probably not going to happen in the same move, but over time, although famous last words as I typically get, but overall, I'd be looking for things to come back down around here, which is likely going to be like the weekly 377, I'd imagine, which I don't have on my charts right now, so it makes it really, really difficult to see. And what do you know, right smack dab in the middle of that box, absolutely beautiful, the confluence on this market, and more importantly, this level right here, also outlined by the 200 simple and 200 exponential average. So while I do think that a pullback here is likely, and we do come back down to 2650, 2630-ish region, I need to see it actually break below on a time frame that matters, because we are kind of in a rock and we're caught between a rock and a hard place. A hard place always going to be the 200 simple and 200 exponential average, just by definition, and the hard place a little bit less hard, but the 10 symbol to the upside, giving us a nice impetus for at least a short-term reversal. Let's see how this looks like on an hourly. Hourly does look like it's going to get another try to the upside here, but if that try gets rejected, this looks relatively similar to Bitcoin as well now, doesn't it? We have one gigantic, what do you want to call this? Do you want to call it a channel? Do you want to call it a wedge? I don't care what you call it. The implication is more or less the same. Pattern of redistribution. And in this case, is volume signature confirming this? A little bit less so than on Bitcoin, to be fair. We actually do see quite a climax down around here, but still tailing off nonetheless. So I do think that it can put in some more time going sideways here in this level. But overall, as long as it's below the 55, that does look like redistribution. If it can get back above the 55, especially above the current high, even just trading above this high or closing an hourly dildo above this high would probably be good enough for me. And I would target a move extending all the way towards the 290s region, maybe like 295 region ish, we'll call it, is going to be on SPY because it's usually about 10, divisible by 10. We can actually just go do a quick look on it. Obviously, it's not trading right now, but I just want to see for relevant levels. Yeah, around 295 is where I'd be looking towards if we do take out the current high. But I think that that's not really what's going on here. I think that actually it's a little bit more under recent pressure rather than later pressure. And this is further, enhanced by the fact that Japan is already about 2.5% down on the day and confirming a very lovely reversal right here. A lot more reversal reversal-ish, looking at E-mini to be fair, or SPY to be fair. But, putting in a nice hangman dildo right here, plus follow through to the downside. If Japan closes, especially below, it's called 18,600, I would be looking for this one to come all the way back down to the prior low, at the very least down around here, probably another small bounce, and then retest the current low overall, which is, these world markets typically trade together. Typically, U.S. markets do lead, so Japan breaking down isn't the end of the world, but it's, Japan does hold a lot of weight. They are a major player in the world, of course, and I would imagine that them coming down around there is, we're all connected here, so probably gonna extrapolate into E-mini futures as well. So keep an eye on that. As well, as we've shown in the past, that these markets are heavily correlated, and if these are all just kind of playing out the the classic bear market rallies, then we might actually have a problem. But for right now, that's what I'm looking at right over there. Let's go check out probabilities for Bitcoin. I didn't really do this all that well on the start of this. So basically, we did close a 4-hour right on target of this trend line. Is that good enough for a break? No, I would say not necessarily just yet, but another 4-hour closure below this region, yeah, it probably does it. So let's look at probabilities with these areas in mind. Again, $7,000 to the upside does not do anything for me for the medium or higher term timeframes. It will for the shorter term timeframes, and I would target a move actually all the way up to 73 to 74. By the same token, it's a little bit difficult to the downside. I'd like to look at a daily close below 6,400, because remember that will actually put the 2-day Stokes to the downside, and then that would really help confirm this as as a redistribution move that is being confirmed by momentum oscillators now. So let's go on over here. And let's check it out. We got our GDAX chart up with probability ranges in mind. I'll first start off with the low time frame range for for Bitcoin. It's going to be about let's call it like 66.50. It's really difficult to get the low time frame range to the downside, because I think that we're like literally sitting right on it right now. But I would like to be a little bit conservative with it, just see what these probabilities are going to look like. And what do you know? It's actually rather funny here. Wait, hold on. Is that... Sir, what's going on here? Oh, okay, yeah, okay, I get it. I do want to be consistent with this, but technically speaking, as of right now, the above target probability is actually about 45.5%. The below target probability on this next daily dildo closure is almost a little bit less than 18%. So actually, this playing out as a fake out is still viable. It is still viable. So it is a little bit too premature to be calling breakdowns right now, as it stands. And I think that's reasonable. Let's look at 6,400, because that's relevant for obviously the lower term time frames, the medium term time frames, not even the medium, but the higher term time frames, the two-day dildo momentum also is turning back down. And then we'll look at the upside region, which I will now put at 7,300. And that would change my medium term time frame bias to the upside, and I would target a move actually all the way to maybe even 78, 7900-ish region. I didn't really even talk about that during this video. Maybe bad on me. Let's see what the probability of this is. So to the upside on this next daily dildo closure is about 16.75%. That's actually rather decent, and the downside is really low, 4.5%. Now, of course, probabilities don't mean that it can't happen. It just means that if we were to take this example 100 times, 4.5 times, it would break to the downside. 16 almost 17 times it would break to the upside, and more often than not, for everything else in between, it would, or if you want to get super exact, I guess it would be 78.75% of the time we would just be closing between those two ranges. So do we see resolution today? It could happen, but it doesn't seem very likely actually today. It seems like we're just going to see short-term moves today. And to be fair, today is typically it's technically not a holiday in the US markets. But a lot of people would usually take this day off anyways, so it's usually a slower day anyways. So, are we going to see a breakdown today? Maybe, maybe not. That's like the antithesis of all analysis. Like, maybe we might break up or we might break down. We might not even see a break at all. It's like, well, you get what I'm saying, right? We're just looking at probabilities, coming up with some fun stuff for this. Anyways, on top of that, is there anything else to speak about today, or have I talked your ears off already? We can go take a quick look at Butyrol and Mrs. Litecoin. Butyrol looking a little bit more on the bear side. I like to see the daily fully and formally close below the 21. to get more bearish on this one. 12-hour kind of already working its way through. Momentum also just following through alongside of it. We see 12-hour Stokes down. We see daily Stokes down. What about 2-day? R is actually still up. What about Mrs. Litecoin? I think she's been kind of leading the pack to the downside. And same thing here. If Mrs. Litecoin does close, I mean, Mrs. Litecoin is a clear rejection of the 21. If she closes today below $41, I would feel very comfortable getting bearish for a move down to about 35 even. I know before I was saying about 39. We pretty much already hit that move yesterday. So I'd extend targets actually all the way down to 35.5 bucks ish region. And momentum also, it's actually still looking very similar to Bitcoin right now, although the 2-day RSI having very obvious hidden bearish divergence between this point and this point over here back in when it was above about 62, 63 bucks. So 62 bucks right on over here. Next high about 46 bucks right here. That's a pretty massive difference, especially when we're looking at it from a percentage basis, 26%. Putting in hidden bearish divergence. I mean, this is, I think this is still likely to come down as well. Looking at the weekly too, similar to Bitcoin, except much worse. Similar to Bitcoin, except much worse. What I mean by that is we actually are going to be looking at a weekly dildo death cross. As long as price action is below $60, and especially as price action is below, I mean, here or lower, I mean, it's just going to happen faster. We've actually never seen a weekly death cross on Mrs. Litecoin. So probably not too much to go off of as it is right now, but would probably be good enough to shove it back down to low side of the range. Again, 35 to 36 bucks is where I'd be looking towards. If and when that does play out. Do we want to look at Link? I know a lot of people are talking about Link right now. We can give it a quick glance over here. And what is he doing? The fucking darling of the market once again. We did say that it was likely to pop back up to $3.50. That target has been hit. And now would I extend targets all the way to 410? I think so, yes. This chart is just a stark contrast to anything else in the cryptocurrency space. As far as I know, I'm sure that there's a few other outliers out there, but for multiple years holding this formation and putting in, higher term time frame, higher highs and higher lows, can't hate it. Can't hate that. In fact, it's quite good. And look at this, momentum oscillators are down this whole way, and we have a lovely trend line right here that we're actually hitting exactly right now. So I suppose I'd still be long-term bullish on Link. And I do think that medium term, it's going to be popping back up to, 410, 420-ish region. Great number. So yeah, Link's still okay. Let's go to a daily maybe as well. Daily, do we get that continuation sooner rather than later? I don't know. But what I can say though, is that just like we had that kind of bait and switch on the 4-hour golden cross death cross, you actually have a bait and switch to a lesser extent on the daily golden cross right here, hinting at a cross to the downside. No. Right at the last second, green dildos rising from the fucking ashes. And well, I do think that we'd have a similar reaction, but to the other side. So Link's still the darling of the market as far as I'm concerned. And I don't fucking own a single one of them, and I feel stupid for not. Anyways, it's all good. I don't really care to be trading alts, but fair enough. For all the shit that I give alts, this one does something different consistently, and a long-term uptrend in this market when pretty much nothing else has looked remotely close to this, at least as far as I'm concerned, or I've seen, that deserves a lot of respect. I mean, at least for myself, you're free to do whatever you want out there. Let's go check out gold as well. Gold looking good. We've been bullish on gold, and I'd stay bullish on gold. I think that gold is going to be, maybe pops back down to like 1630-ish region. But I'd look at that as an opportunity. I think medium and long term still targeting 1800 and maybe beyond. In similar to Link, we do see that momentum oscillator is crossing back up over here. Don't have the same trend line, but I do like that nonetheless. Other than that, major hidden bullish divergence being played out right here, and it's already played out, I do think. And if this next weekly closes in the bullish control zone, I'd look at that as massively bullish, because we do have one long-term descending channel right here, which typically known to break out to the upside as a reaccumulation formation, which is pretty much implied by the price action right here. Further verified by the volatility signature. Probably better maybe on like a daily. Yeah, you kind of see it. After expanding to the downside, now contracting to the upside, and I'd look for that to just slowly but surely kind of float its way up. I'm curious how the lower term timeframes look, just out of curiosity. Do have a little bit of bearish divergence perhaps in the making here, but I think overall, if it wants to come back down to 1620, that's not problematic at all. Yeah, and I'll remain long-term bullish on it, medium-term bullish on it, even short-term bullish on it, especially as long as it's above those areas would change, but if I just wanted to kind of give a blanket area, 1560-ish region, I think that looks good. Anyways, back on a Bitcoin. It's already 30 minutes into this bitch. Let's wrap up the most important areas to be aware of and then send this baby off. We do see that Bitcoin more or less kind of teetering around this lower end blue box territory right here. I do think that it's more of a technicality that I'm waiting for it to break than anything else. But at the end of the day, it is an assumption, and for full disclosure, I am uncovered short here. I will cover back above 68.50, and I might even go long above $7,000. At least for another few $100 move to the upside above here. If Bitcoin, for whatever reason, resurrects itself back above about 7,400, especially on a 12-hour or daily delta closure, I would target a move actually all the way up towards this blue box, towards 7,800-ish region. But for now, I think the probabilities, or actually technically the probabilities are still on the upside a little bit. But I do think that they're going to naturally shift to the downside the longer that Bitcoin especially hangs below $7,000. And, for the downside, it's difficult here. If I see a 12-hour delta closure, let's call it below 66.50, I would target this next move down to about 6,400. That's going to be a critical area for the daily closure, as we just spoke about. And if Bitcoin closes, there or lower, I would look for probably a short-term time frame bounce here. But I look for that bounce to get sold into. How high does the bounce get? Maybe 6,700, maybe even 6,800, maybe somewhere in this blue box right here. But ultimately, I'd look for it to come all the way down and test the next level a little bit below 6,000 in the $5,900 region. And probably another small bounce there, then test around 56, around the weekly 200, and then if that one fails as well, then I would target the full-on measure move all the way down to about 4,900-ish region. I think that's going to do it for right now. Like I said, I'll be back on Twitch later, looking at some of the immediate price action and playing some war strategy games. Really, really excited for that. As always, I need to eat a shit ton of steak right now and refuel. I will be signing off. Take care, and until next time.